So if you are a US owner of a CFC and you don't meet the Subpart F criteria, principally looking at passive income, that used to be the end of the analysis, but now non-passive businesses can also be caught by some anti-avoidance rules.
Yes, exactly. There is this wonderfully named Global Intangible Low Taxed Income, referred to as GILTI, which basically looks to set a minimum tax on overseas corporate profits, which relates to income due from intangibles.
And what is an intangible for these purposes, and what kind of businesses get caught by these rules?
So this was initially brought in, particularly for large tech firms, where they were able to generate profits in countries where they didn't necessarily have a large amount of fixed assets. And by fixed assets, what we mean is kind of in a traditional sense of bricks and mortar, plant and machinery, and buildings, etc.
So, in theory, a business that, an accounting firm, for example, that rents premises, has some computers and some furniture, but actually survives on its intellectual property, its goodwill, in terms of the value of its unpublished balance sheet, they can be caught by these rules.
Unfortunately, so it covers anything that isn't tangible. So where you rent your property, or you might rent your computers even, they are not fixed assets of the business, and therefore the profits that your accountancy firm makes can be caught as GILTI income for the US.
So it sounds like if you are an American that has a CFC and you're not running a manufacturing company or some other business with a lot of plant and machinery on the books, it's quite easy to be caught by these rules. If you are, how's it taxed?
It's similar to Subpart F income, i.e. the US owner actually has to pick up GILTI on their tax return and pay ordinary tax rates on that income. However, there are various elections as well as exceptions to that rule, because obviously this rule is there to attack income that is not subject to a high rate of tax. Although obviously with these new rules in place, you will have to think about whether actually using a foreign company is even the right structure for your business if you are an American entrepreneur.